All right, welcome back, everyone, for another deep dive.
Always a pleasure to be back.
Today, we're going to be looking at some pretty interesting stuff happening over in the Philippines.
Okay.
Their social security system,
Interesting.
the SSS.
Yeah.
Now, if you follow, global social security systems, you know all about the SSS.
Right.
And if not, no worries, we'll give you the basics here. But we came across this article in a Philippine newspaper
Okay.
called Pasted Text,
Mm-hmm.
and it was published on Saturday. So it's really hot off the press here.
Wow, very recent.
Yeah.
What's it about?
Well, they're looking at some changes they want to make to the SSS in 2025,
Okay.
and they sound really promising.
Oh, that's good. What kind of changes?
Well, they're talking about some interest rate cuts.
Really?
Yeah, for loans.
Nice.
They want to make the pension confirmation process easier.
That's always good to hear.
Yeah, it's a pain.
Streamlining bureaucracy.
Exactly. And, they want to make sure that self-employed people are contributing to the system.
Mm-hmm. That makes sense. Keeping it sustainable, right? So loan interest rate cuts, always good news for borrowers.
So this is for, salary loans and calamity loans.
Oh, wow. So it could really help people in tough situations.
Yeah, like those hit by typhoons and things like that.
Yeah, absolutely.
Now, they haven't actually said what the interest rate cuts will be yet.
Keeping us in suspense.
But they are attributing this to a solid performance. Those are their words of their investment portfolio.
Well, that's encouraging to hear. It means they're managing things well.
Right. So they're allowed to invest up to 15% of their reserve fund.
Okay.
And they've been seeing returns of 5.8 to 6.6% annually.
Wow. That's not bad at all, especially considering, the pandemic and everything.
Yeah, it's pretty impressive, right?
Definitely. Makes you wonder, how does that stack up against other funds or even their own past performance?
Yeah, that's a good question. Maybe something to look into, for our listeners who are interested in that kind of stuff.
Yeah, for the finance nerds out there. But the bottom line is, it's good news for borrowers.
Yeah, absolutely. Lower interest rates mean people can, borrow a little more if they need to.
More breathing room, especially in emergencies.
Exactly. And speaking of emergencies, they gave some numbers on their calamity loans.
Oh, yeah.
Yeah. In 2024, they disbursed 9.7 billion pesos.
Wow. That's a significant amount.
Yeah, that's over 500,000 members who got assistance.
That's a lot of people helped.
Yeah. And, on top of all that, they're also expecting more revenue coming in.
Oh, how so?
Well, from contribution rate hikes and increases in salary credits.
Okay, so they're being smart about it, not just cutting rates without a plan.
Yeah, it seems like they've thought this through, to make sure it all works.
Yeah, makes sense. Got to keep the system sustainable.
Exactly.
So what's this about pension confirmation being a pain?
Right, so there's this program called ACOP.
ACOP?
Yeah, Annual Confirmation of Pensioners.
Tatchy.
Right, so certain pensioners, they have to confirm they're still alive.
Every year.
Yeah, every year.
I can see how that could be a hassle.
Yep.
Especially for, older folks.
Exactly, especially older people with mobility issues.
Yeah, makes sense why they'd want to make that easier.
Yeah, and it sounds like they're reviewing the guidelines.
Okay, good to know.
And get this, they're even talking about home visits.
Wow, that's going the extra mile. I wonder what else they're considering.
Yeah, like maybe some kind of online check-in system.
Right, for those who are comfortable with technology, having different options would be great.
Yeah, make it accessible for everyone.
So what's the deal with the self-employed folks?
Right, so the article says they're trying to improve collection compliance from self-employed professionals.
Yeah, that can be a tricky area. You don't have the same kind of employer-based deductions.
Exactly.
It's all on the individual to stay on top of it.
Yeah. So I'm wondering, how do they actually improve that?
Good question. Maybe clearer guidelines would help.
Yeah. Or more payment options.
Right, making it more convenient.
Or maybe even some kind of incentive.
Could be. It's about finding the right balance, encouraging people to contribute while making it as easy as possible for them.
Yeah, and again, it all comes back to, keeping the system sustainable.
Absolutely. If everyone benefits, everyone should contribute.
Right. So big picture, it seems like SSS is really trying to step up their game here.
I'd say so. Cutting loan cost, simplifying things for pensioners, and making sure everyone contributes fairly, it's all good stuff.
It really does seem like they're trying to be more proactive.
Yeah, and not just managing money, but really thinking about how it affects people's lives.
That's a great point. It's not just about numbers, it's about people.
Exactly.
Well, this deep dive has given us a good look at what SSS has planned.
Some positive changes on the horizon.
Yeah, but it does leave me wondering, what else is in store? What other changes might they be considering down the road?
That's a great question for our listeners to ponder. What would they like to see?
Right. What would make the system even better? We'd love to hear your thoughts.
Keep that conversation going.
Until next time.
See you then.